Talk to me about the rest of the world, particularly what's going on in Asia. You have some important data coming out of China overnight on GDP. Do you see opportunity there in some of the Asian equity markets?
We do. Asian stocks are probably our favorite region right now. They've rebounded quickly, and it's for very clear reasons. Their governments were generally quick to act, a lot of them, because of the amount of impact that SARS had on them. Actually had plans that were kind of off the shelf for a pandemic that they were able to implement. Similarly, their citizens were really in strict compliance with social distancing measures, and so that in turn has helped them really get over the coronavirus crisis quicker. Then, as the rest of the world starts recovering, we also think that semiconductor and 5G demand is going to spring back. That should really help nations like China and South Korea. And then the last leg here is that emerging markets are becoming increasingly more self-sufficient. What we're seeing is intra-emerging market trade is actually rising at a very rapid clip. And ironically, this is in part helped by that rise of protectionism that we've seen from developed market nations like the U.S. and the U.K. So all of that creates a moat for emerging markets and especially emerging Asian equity markets to do relatively well, even as developed markets struggle to regain their footing.
But you mentioned China there, and I'm fascinated by the fact that you think the 5G push is a help there, given what we see in the news of Huawei today, but also the valuation issue with going on with China. Do you not think Chinese stocks have run up too far too fast? Is it outside of China that you're looking at in particular?
I think we can make a valuation, or rather an overvaluation argument for U.S. stocks as well, especially if we look at forward earnings right now. Barring again the revisions that I mentioned I'd like to see, it's fair to say that there is some degree of richness, or even a fair degree of richness in Asian stocks, but we do think that they have more ability to prevent their market from tanking. They were, throughout this whole crisis, very careful with not putting on too heavy-handed of a stimulus, as we saw the measures that failed back in 2015, 2016. We haven't seen that, so there's a lot of ammunition that China has to keep its equity market at least steady. And meanwhile, we actually haven't seen too much flow from the institutional side back into Asia. So we do think that as institutions get off the sidelines, get off of holding cash, they may actually turn to EMs. So long way of saying, yes, it's expensive, but there's a reason for it.